Ladies and gentlemen, good morning and welcome to Powergrid Infrastructure Investment Trust Q1 FY23 post-results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Modi from ICICI Securities. Thank you and over to you, sir.
Thank you, Michelle. Good morning, everybody. Thank you for joining us for the Q1 FY23 post-result conference call of Powergrid Infrastructure Investment Trust. We have with us the senior management represented by Mr. Abhay Chaudhary, Non-Executive Chairperson, Mr. A.K. Singhal, Non-Executive Director, Mr. Purushottam Agarwal, CEO, Mr. Amit Garg, Chief Financial Officer, along with the other senior officials from the management. I would like to hand over the floor to Mr. Chaudhary, who will give his initial remarks, post which we can have a Q&A session. Thank you and over to you, sir.
Good morning, everyone. At the outset, I, on behalf of Powergrid Uchaha Transmission Limited, investment manager to PG InvIT, would like to thank all the participants for sparing time and joining this call in the midst of busy result season. I have with me Mr. A.K. Singhal, Director PUTL, Mr. Purushottam Agarwal, CEO PUTL, and Mr. Amit Garg, CFO PUTL, and other senior officials. On Wednesday, 27 July 22, PG InvIT announced its unaudited financial results for the quarter ended June 30, 2022, and distribution for the quarter ended June 30, 2022, which have been disclosed on both the stock exchanges. A presentation on Q1 FY23 results of PG InvIT has been uploaded on the website and may please be referred. I do not propose to go through the same slide by slide in the interest of time. PG InvIT currently owns 100% equity shareholding in VTL and 74% in each of the other 4 SPVs. These 5 SPVs are operational projects comprising 11 transmission lines with a network of approximately 3,699 circuit kilometers and 3 substations with 6,630 MVA transformation capacity. The remaining life of the PSA is about between 30 to 32 years. Powered by fully operational and revenue generating transmission assets having sound operational track record with high availability, assurance in the form of backing of India's largest transmission utility, Powergrid as its sponsor and its project manager, and 35 years contract period under TBCB mechanism, and advantage of availability-based tariffs, large pool of sponsors TBCB assets, Government of India's trust on asset monetization, and debt-funded acquisition strategy, PG InvIT provides a unique value proposition of AAA, that is, asset assurance and advantage, to its investors and aims to provide consistent, stable, and visible returns to its unit holders. I will start from the distribution for the quarter. We have announced a distribution of rupees 3 per unit, which would be paid to the unit holders before August 11, 2022. This is the first distribution by the trust for the fiscal 2023 and the 4th consecutive distribution since our listing in May 21. You would recall that for fiscal 2022, an aggregate distribution of rupees 10.5 per unit was made to the unit holders for the working period of the trust, that is from 13th May 21 to 31st March 22. The latest distribution of rupees 3 per unit is in line with our distribution policy and SEBI regulations, which stipulate not less than 90% of NDCF to be distributed to unit holders. I would like to reiterate that as per our distribution policy, the distributions shall be declared and made not less than once every quarter. The monthly availability of each of the SPV during the period April to June 2022 was in excess of target availability. SPV-wise, the average availability per quarter has ranged between 99.77% to 100%. This data is on provisional basis, and the monthly availability certificates for the period April 22 to June 22 are awaited from the respective RPCs. Our project manager ensured that the operation and maintenance of the asset was carried out efficiently using safety protocols, and no accidents were reported during the quarter. During the current financial year, the total income on a consolidated basis for the quarter ended June 30, 2022 was about rupees 3,313.85 million, which included 3,202.29 million of revenue from operations and rupees 111.56 million of other income. The other income is mainly on account of interest earned on the CLTD accounts and surcharge income. The total expenses for the quarter at the consolidated level stood at about rupees 1,064.76 million. The NDCF calculated at SPV level have been provided along with the consolidated financial results disclosed on the stock exchanges. The cash flows from SPVs are in the nature of interest income, dividend income, and repayment of SPV debt. More than 90% of NDCF of the SPV has been upstreamed to PG InvIT by June 30, 2022, in line with the InvIT regulations and the trust distribution policy. The NDCF of PG InvIT for the quarter ended June 30, 2022 works out to rupees 2,806.29 million. We have announced a distribution of rupees 3 per unit, which comprises of interest component of rupees 1.97, taxable dividend component of rupees 0.50, exempt dividend component of rupees 0.28, repayment of SPV debt of rupees 0.24, and treasury income of rupees 0.01. The total distribution amount works out to approximately 97% of the NDCF at PG InvIT level, as against at least 90% as stipulated in the regulations and our distribution policy. With this distribution, we have an aggregate paid or announced an aggregate of rupees 13.50 per unit to our unit holders since our listing in May 21. As on June 30th, 2022, PG InvIT had an external borrowing of rupees 5,748.66 million, which was raised to part finance the acquisition. You would recall that in March 22, PG InvIT had entered into an agreement with HDFC Bank Limited for rupees 7,000 million loan for part financing the funding requirements towards acquisition as shared in the past. The loan is a floating rate loan linked to 3 months treasury bill and was less than 6% at the time of draw. In March 22, net debt as a percentage of InvIT value as on June 30th, 22 works out to less than 1%, which provides significant headroom for funding future acquisitions entirely through debt. The trust contributes to enjoy highest credit ratings, that is AAA, with stable outlook from all the 3 rating
The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi, good morning, sir, and congratulations on a decent set of numbers. So my first question is on the national monetization program. I think we're already in July, and we haven't heard anything. Is there something on the cards? Can you just lay out the timeline if you are aware of it? And is there something which is holding up the monetization of the new assets?
This total target as per the national monetization plan for Powergrid has been asked by the government is about rupees 45,200 crore till 2025. The breakup of which is expected to be in the already completed financial year. It was 7,700, which was achieved. In this financial year, the target is rupees 7,500 crore for Powergrid. And the next financial year 24, it is 15,000 crore. And financial year 25, it is 15,000 crore. And the monetization is expected to happen in the second half of the current financial year. And we expect to complete the monetization of Powergrid of 7,500 crore this year too. Thank you.
Is it something which holding up, as we haven't heard any announcement as of now? It's already July.
No, there's nothing holding up. Already we have the information that Powergrid is already decided, is in the process, and the modalities is being worked out. The valuation of the process is being done by both Powergrid as well as the current 26% holding in PKATL. That's the valuation we have to do and put up to Powergrid, and then both of us have to decide.
This 26% you're talking about the new asset where the lock-in expired.
That is
lock-in expired.
Kalam.
Yes, I understood. Okay, understood.
Yeah.
And sir, have you entered into any indicative discussion with the lenders for such a large amount which you need to raise in the second half to fund the national monetization program, and what are the rates you are expecting?
Not as of now, because as and when the assets come, we intend to talk with the lenders, and we expect to get good rates. And I think to be more specific, I think CEO, I would request CEO to supplement this.
We have talked with some banks and lender already. We have spoken, and we expect the best rate we will get as already.
Sorry, sir. Sorry to interrupt, sir. I would request you to come closer to the speaker and speak, please.
We have spoken with some bankers regarding this loan, and as you know, we have already finalized one facility agreement with HDFC Bank in the month of March for 700 crore rupees. That was raised at the time of at a minimum rate available to the market. That was 5.75% at that time. So we expect a good rate of raising the loan, and when the asset will come, then we will go further.
So was there an increase in working capital during the quarter? Has the receivable days increased, and why it is so?
Total receivable days as on 30th June is 69 days. No doubt it has increased from 43 days to 69 days in the month of March 22. Since this is the mainly CTU is responsible for billing and collection mechanism, and all the transmission licenses got the proportional credit of this collection. So this is not for the PG InvIT. This is for all the transmission liability as well. So certainly the receivable has go up to 69 days, as you seen from our presentation.
So why it has gone up? This is a sharp
Just a
increase.
minute, CEO, I will respond. See, I'm the Abhay Chaudhary here. See, the receivable, normally there's a pattern. See, CPU is a main agency who is collecting all the tariffs on behalf of all the transmission licensees, right? And the payers are basically the state utilities. So in the last so many years, if you can see the trend, normally it is the receivables become high in the mid of year, and then it tapers down and it becomes minimum by end of March. Because end of March, all the states have their fund which has to be exhausted, all the government funds which has been granted to the states. And in the mid, they try to pay maybe to a level as per them, the minimum level. As per us, definitely that is not suffice. So there is a trend, and this happens all the year round, and every year. And similarly, you will see this year also. By March 23, it will again go back to hopefully around 40 days.
Understood,
and this is a normal process. Yeah.
Understood. So thank you and all the best. So thank you.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique Asset Management LLP. Please go ahead.
Hi, good morning. So a couple of questions. One, we have about 24 paise of SPV debt repayment. Can you explain what this is?
24% of, this is the, I think the capital, just a minute, the breakup, you mean to say the breakup of 3 rupees?
No, I'm asking what does this entry mean, that 0.24 rupees of DPU, which is SPV debt repayment?
Just a minute, sir. So trust has extended the debt to the SPV, and SPV and from the SPV, trust got repayment against this loan. So the loan, which amount, the repayment which is upstream to the trust, has distributed to the unit holder.
Okay. So on an annual basis or quarterly basis, what would this amount come to be every year?
Because there is no, as such, we have not mentioned any schedule for that. As and when required, that will be repaid by the SPV to the trust.
Okay. Because earlier we had mentioned that whatever interest the SPVs have to pay the trust, any cash which is generated over and above this will be repaid in the form of dividend. So how do you decide between dividend or debt repayment? How is this calculation done?
No, sir. As per the act, the upstream, the amount in the form which is upstream to the trust is distributed in the same form to the unit holder. So the profit which is upstream to the trust will be paid in the form of dividend, and interest in the form of interest, and repayment in the form of repayment.
No, I understand that, sir. My question is,
SPVs in the current quarter. So where we have the excess cash, but not sufficient PAT or reserve, we obviously to maintain the payout whatever we have promised to the investors, the loan repayment is got done, sir.
Okay, fair enough. Very clear. So my second question is on the debt. We have about 575 crores of debt right now. We'll take some more. I believe this first tranche of debt which we took from HDFC Bank was on a floating rate. So maybe not now, maybe 3 years out when we have acquired enough assets and our asset book is large. How would this proportion be between floating rate debt and fixed rate debt? The reason I ask this is because our assets are fixed in terms of pricing or the revenue that will, or the cash flow that it will generate. So isn't this a risk from a unit holder's perspective that we are taking floating rate debt, because then your distribution can go haywire?
I'll answer and then my CFO can supplement. See, while PG InvIT has a huge potential for making acquisition through debt funding, which would include both non-convertible debentures and bank loans, considering that this requirement was very, very small and it was our first debt raise, we thought of it to be prudent to test the waters and go for bank loans. But going forward, we would definitely be looking at all options to have diversified debt profile. And when the new assets come for acquisitions, we can see other options as well. My CFO can supplement.
Yes, sir. I mean, the chairman, sir, has put it very correctly. I mean, we hope to be a large InvIT going forward, acquiring assets. And obviously, we would like to have a bouquet of, debt in our portfolio to, mitigate the risks at the unit holder level. As Prateek ji rightly pointed out that the transmission charges are fixed and any floating rate will obviously give that much of, element of risk. But having said that, the markets are unpredictable. And there is a cyclical, interest rate movement, if you, study the past movements in the interest rate. So we would like to have a, portfolio wherein there is a mix of different debt profiles per se, maybe fixed NCDs, fixed term loans and floating loans. So this being a very small loan of around about 600 odd crores only, as chairman had pointed out, we just tested the waters and we wanted to create name of PG InvIT in the money markets or financial markets per se. So that was the reason.
Fair enough. Makes a lot of sense. And so in 23, this whatever 7,500 crores of assets from Powergrid. I mean, I'm not sure if it's out in public, but this assets we are only going to get, or there's going to be a bidding for the same?
I hope that definitely we should get it. As the Government of India directives for the InvIT to all the public sectors, including Powergrid. And so let us keep our fingers crossed, but at the same time, we are optimistic of getting it.
Fair enough. And so just last clarification, this debt repayment of 24 paise to unit holders. So we should account this as capital repayment and adjust it as in our cost, correct? From an accounting or tax perspective for the unit holder.
Yeah, we have already accounted as a capital repayment in our records. I think CFO, he can clarify.
No, sir, this is actually the loan which the SPVs paid back to InvIT and we distributed to InvIT. Regarding the taxability of the same, probably, you need to consult your tax consultant for the same. We will not be able to give a guidance on the taxation aspect of the same.
Okay. I just wanted to understand what the nature of it. No, but fine, I'll check that. Sure. Thank you so much, sir, and all the best.
That is repayment of debt.
Fair enough. Sure. Great. Thank you so much and all the best, sir.
Thank you. The next question is from the line of Puneet from HSBC Bank. Please go ahead.
Yeah, thanks so much for the clarification so far. My first question is, what kind of assets are you seeing outside the PGCL portfolio in terms of transmission? And what is it that's available for sale? If you can give some color there.
I mean, outside Powergrid, there will be definitely only the operational transmission assets.
Yeah.
But we are as our sponsor is Powergrid, but outside presently not much visibility, but yes, opportunities are definitely there, and we are keeping a track of them, but presently not much.
Okay. And in your memorandum, are you also permitted to invest in assets outside the transmission portfolio? Can you acquire renewable energy assets as well, or things like that?
Yeah, there's nothing stops us at the moment, but we are into infrastructure. We are infrastructure in which, and so our first options will be definitely transmission, and we are a new InvIT company. So let us see in the near future how we go about it.
Okay, but there is nothing which stops you from acquiring if you want to, right?
Yeah.
Okay. That's great. And my third question is, if you can, share what is your floating rate linked to? Is it repo linked or is it MCLR linked? And what is the rate right now? So you acquired at 575. What is the prevailing run rate now? And how often does it get reset?
Yeah, it is the loan what we had taken. So that interest rate on term loan from the bank was 3 months treasury bill rate plus spread of 194 basis points, which was to be reset on quarterly basis. The loan was repayable in 64 quarterly installments of varying amounts commencing from 30th June 22, and approximately 50% repayment is back-ended. And as on the date of drawal, the rate of interest overall was 5.75%. And as on 30th June, the rate of interest on the loan is 7.08%. That is 5.14 of the T-bill plus spread of 1.94.
Understood. That's it. So 5.14 T-bill and 3-month T-bill, right? And 1.94 you said.
Yeah.
Okay, great. That's very helpful. Thank you so much.
Thank you.
Thank you. Before we go forward, I would request the line of management to just look into the echo that is following their voices. So there was an echo when you were speaking, when you were answering the questions.
Okay, in just a minute. Maybe the backup, the second, our mobile line. Yeah.
Yes, sir. I would request you to mute that other line if possible.
Yeah.
Thank you so much. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Rikesh Parekh from Absolute Advisors. Please go ahead.
Yeah. Sir, my first question is regarding what is the headroom available to us to the extent we can buy without increasing the capital, based on the current capital?
Yeah, see, as per the regulations, the total headroom is till 70%, and further acquisitions are envisaged to be primarily funded through debt, and considering the present leverage position, Powergrid PG InvIT has a scope of acquiring assets worth approximately 20,000 crores through debt funding.
Okay, great. So that means for the current year and the next year, it will be very comfortable to acquire
Yeah. Definitely.
Okay.
More than comfortable.
And in terms of the receivable days, in terms of availability, I see our plant availability is around 98%. So, when I look at the competition there, it is at 99% odd or so plus. So, anything missing out over there? Means we might be missing out on some benefit incentive.
That's right. See, the maximum availability what can be leveraged is 99.75. There's beyond that 9.75, we don't get any extra additional tariff. And presently, we are beyond that 9.75. So, I mean, because 0.25 has been kept for the annual maintenance.
Yeah.
Where if you have to do some plant maintenance, at least 0.25%. So the regulation does not allow for any extra tariff beyond 99.75%, and we are already above 99.75% at the moment.
Okay. And last, what is our average cost of debt presently, what we have on the books?
CFO, may I like to supplement, please?
Yes, sir. As told by Chairman sir earlier, it is as at 30th of June, it was 7.08%. We only have one loan as of now of 575 odd crores from HDFC Bank, which is linked to the T-bills,
Okay.
3-month T-bill. So as at 30th of June, it was 7.08.
Okay. Thanks. That's it from my side. Thank you.
Thank you.
Thank you.
The next question is from the line of Vipul Kumar Anupchand Shah from Sumangal Investment. Please go ahead.
Hi, sir. So, this repayment of debt at SPV level, so I still do not understand because I am investor in other InvIT also. So whenever, they return money as repayment of capital. So I think you should be more clear about this. You cannot say that you check with your chartered account. Either it has to be interest, either it has to be dividend, either it has to be tax exempt dividend, or it has to be return of capital. What do you mean by return of SPV debt? Means I simply cannot understand what do you mean by that?
Yeah, CFO, may I please supplement?
Well,
No, I have completely understood your problem. I am trying to understand the problem of investors' point of view. You cannot just wash over your hands.
I am, whatever.
No, you just check the presentation made by IndiGrid. So whenever they return the capital, they clearly write that it is a return of capital. So you please clarify whether this is a interest, this is dividend, this is the dividend tax exempt, or this is a return of capital. There can be only four ways of payment, according to me. How do you treat it? An investor treat this in his books of account.
Sir, for you purchase the units of the trust, and you say you purchase it for rupees 100. Now the 100 rupees which you gave to the trust was invested by the trust in the SPVs in two forms. One, to repay the existing debt that those SPVs were having to the then lender, and through that amount, the debt in the name of the trust stands in the books of the SPVs. Now the second part of your investment which went into the books of these SPVs was the equity which we purchased from say Powergrid. So for purchase of Powergrid, the money obtained from the unit holders was paid back to Powergrid to purchase the equity. Now you as a unit holder has invested 100 rupees say in the form of for purchasing the unit, but we as a InvIT invested in two ways. First, to lend debt to the SPV, and the other part to purchase the equity of the SPV from the sponsor. So what we are repaying you back is the money which the trust invested in SPV as debt. So this is giving more clarity as to what money you are getting back. And in case you study certain REITs which are listed in the market, probably you will be able to get more clarity on it.
No, that is only I am saying you, sir. So I am investor in IndiGrid since its inception. So whenever they return the capital, you should write it as a return of capital. From whatever you are saying, it looks like you are returning the capital, but you are not mentioning it properly. This can create unnecessary complications as far as tax this thing goes. So I suggest that you go through the presentations of IndiGrid, then you will realize what I am trying to convey to you.
Sir, we cannot comment upon the presentations being given by any other InvIT.
No, but you are talking from your point of view only. We have given money to you only 100 rupees. Then you have to write that this 24 paisa or 26 paisa, whatever is written, it is return of capital or what it is.
Sorry to interrupt, Mr. Shah. I would request you to rejoin.
No. Until this point is clear, I will not. You cannot interrupt me.
Sir,
they are not giving me proper answer.
Sir, I would request you to just go offline with the management and talk about this. Thank you.
Hello. This is the chairman speaking. We can take a clarification from the chartered accountant as well as the tax consultant and give them a proper reply.
Thank you.
Yeah.
The next question is from the line of Keyur Asher from PNB MetLife. Please go ahead.
Yeah. Thank you for this opportunity. So I just had this bookkeeping question on the cash reserve that we hold at the end of the quarter. So in that the SPV level as well as the InvIT level, if you could share that. I'm just trying to understand.
Please repeat the question once again.
Yeah. So I wanted to understand about the cash reserves that we hold at the end of the quarter at both the SPV level as well as the InvIT level.
Yeah. The available cash as on 30th of June is rupees 4,880.37 million, out of which an amount of rupees 2,730 million is kept for distribution, and the balance amount is kept considering the working capital requirement.
Understood, sir. Yeah. Thank you.
Thank you. The next question is from the line of Anirudh Singhi from Dalal and Tocha Portfolio Managers. Please go ahead.
Hi, good morning. So our total income is 331 crores for the quarter. And if I annualize that and divided by a gross block of 7,500 crores, we get a yield of 17.5%. Would that be the right way to look at this?
Yeah, please repeat. The yield you are saying is around 7.5%?
17.5.
17.5%?
Yeah. So annualize the total income of 331 crores divided by the gross block of 7,555.
Yeah.
So will that...
like to supplement?
Sorry?
Sir, what you are referring to is, income upon the asset base, gross block.
Yeah.
Yeah, so it's a parameter to judge the asset efficiency. So as far as you are judging the efficiency, that how much money the assets are generating, the parameter is correct.
Okay. So the new assets that will acquire, will that be at a similar yield?
Sir,
17.
Acquisitions depends upon a lot of conditions. What are the market conditions? What are the prevailing rates at that point in time, and what is the competitive environment at that given point in time. So all those things are to be considered. But the bottom line remains that future acquisition has to give some benefit to the trust and to the unit holder. So if the yield may be not as high, maybe, I don't know, but it has to result in something additional for my unit holders. So that is the basic premise on which we are working.
Okay. So do we have a flaw in terms of what yield we look at?
This is probably not the right forum to discuss these kind of questions, sir.
Okay, no problem. Thank you so much.
Thank you. The next question is from the line of Tanveer Surre from an individual investor. Please go ahead.
Yeah, hi. Thank you so much for taking my question. Just had one request to the management is that why don't we put out text transcripts of this call on the website? I see only voice transcripts that are available. Would it be possible to have text transcripts as well?
Okay, sir. We will your request, sir. Yeah. We will put it.
Yes, thank you so much. Because all the other, all the other REITs and InvITs as well as all the other listed companies, most of them are having it. So it would be really nice.
Okay, great. Okay, fine.
Okay, thank you.
Thank you. The next question is from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity. Sir, I would like to have some clarification on this treasury income, the 0.01 per unit that we have declared. So, could you just tell us what it is exactly and whether there is a taxation component at the hands of the investors for this?
See, the treasury income forms very minuscule part of the total distribution. This is primarily the interest income earned at the trust level from the temporary deposit made with the bank.
Okay. Yeah. And what was that amount?
That amount, just a minute, just a minute, I will tell you the exact. CFO, can you add? CEO?
Yeah, it was 1 point something odd crores. I mean,
1.5. Yeah.
Maybe somewhere between 1 to 1.5 odd crores.
And this varies every quarter, no? It's not a steady number.
No, it is not a steady number, sir.
Okay. Sir, what was the incentive income for the quarter?
The incentive income for this quarter is 10.42 crore.
10.42. Okay. And sir, I just wanted to know what was the mix when we had acquired the assets and the revenues in March. So how did we fund it exactly? And going forward, say for the PKATL asset, how are we planning to fund it? What will be the mix?
I'll begin that from the internal resources, whatever loan agreement, there is some headroom there with the loan agreement with HDFC, and then for maximum we'll do it through debt only because that is cheaper. And as when the asset comes and the valuation, depending on the valuation, both from the internal resources, the loans agreement signed, as well as the new loans.
Okay, so going forward as well, so for the PKATL asset also, it won't be 100% debt funded. We'll use some internal resources as well.
Yeah, some internal resources, but debt as well.
Okay. Thank you so much, sir. That was it.
Thank you. As that was the last question for today, I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you very much, Rahul, and your team, and thanks again all the participants for attending this call. It was indeed very heartening to see such good participation in today's earnings call by PG Invest. In spite of being at the peak of result season, our vision for PG Invest is to achieve a focused business model with operational efficiency to enhance the returns, value-accretive growth through acquisitions, and an efficient capital structure in order to provide consistent, stable, and visible returns to our unit holders. Thank you once again, and we look forward to your continued support and confidence in PG Invest. Thank you so much again.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.